Recognition of revenue over time. That is the second area of your revenue recognition standard. For each performance obligation that is to be fulfilled over time for the customer, an entity must recognize revenue using either of the two methods. We have two methods under the performance obligation satisfied over time, that is output method and input method. Remember, the revenue would only be recognized over time when the entity is able to measure the progress toward complete satisfaction under the contract. Means, if the progress toward complete satisfaction can be measured, only then we can use the revenue recognition over time using two methods, output methods and input method. Let us discuss these methods one by one. First, let's consider the input method. The input method basically is suitable for construction contracts. In this method, revenue is recognized based upon work performed compared to the total expected cost. For example, we have taken a contract that would take an estimated cost of 1 million, and so far we have spent $400,000. That means 40% of the job has been done. So 40% of revenue should have been recognized so far to date. So remember, revenue is recognized based upon the work performed versus the total expected cost. In other words, the input so far spent versus the total expected input. That's why it's called the input method. The cost. Input means the cost. So the input incurred so far versus the total expected input. And as I told you, this is suitable for construction contracts. And remember, we just cannot charge every cost to the projects. Only costs that are allowed under the input method are the costs directly attributable to the projects. Labor hours expended, resources consumed in the construction, the time elapsed, if the time has certain cost for the project. So we cannot charge our inefficiencies, our abnormal losses, our material wastes on construction projects. General administrative costs, they will not be charged to the contract because they have to be incurred whether we take on the contract or not. Selling and marketing costs are not also included in the cost of the project. So remember, only the costs that are specific to the project, like the cost incurred, labor hours spent, resources consumed, etc. The unrelated, irrelevant cost like general administrative cost that doesn't relate to the contract, any selling and marketing cost that doesn't relate to the contract, any inefficiency that we have wasted material and efforts, they cannot be charged on the contracts. Let us consider an example and develop the idea understood so far. That is, the extent of performance is measured with reference to cost that we just discussed. That if you have incurred $400,000 so far and the total estimated cost for the project is 1 million, so the extent of completion is 40%. So the example basically is based upon this. This is also called cost to cost, way of measuring how much project progress has been made. So this is the example in front of you. On January 1st, year 1, a contractor agrees to build on the customer's land a bridge that is expected to be completed at the end of year 3. It's a 3-year project, so definitely revenue recognition over time. We will consider revenue as the project is progressed. The promised bridge is a single performance obligation to be satisfied over time. The contractor determines that the progress towards completion of the bridge is reasonably measurable using the input method, that is the cost method, and of course based on the cost incurred. The contract price is $2 million and the expected total cost of the project is $1.2 million. So this is the expected revenue, the contract price, and this is the $1.2 million cost that would be incurred over a period of 3 years. The cost incurred detail has been given. In year 1, we spent $300,000, and at the end of year 1, the expected cost to be spent in year 2 and 3 was $900,000. So we can determine the level of completion. The cost incurred so far, it is cost to cost. We have spent $300,000 cost so far, and the total estimated cost is $900,000 to be incurred, and 300,000 already incurred 1.2 million. That means the extent of completion is, of course, 300,000 upon 1.2 million is 25%. It means we have delivered services to the extent of 25%, means out of the total expected revenue, 25% has been earned. 2 million times 25%, that is $500,000. So this is the revenue. Compare this with the cost. The cost incurred so far is $300,000. So comparing these two will give you the gross profit recognized in year 1. The difference between the 25% of the total contract price revenue minus the cost incurred so far. So this is the gross profit recognized in year 1, and that has been given right here, that the total revenue recognized in year 1 is $500,000. The cost of goods sold, that is the cost incurred so far, is $300,000. The difference, $200,000, represents the gross profit for year 1. There is also a quick way of doing it. Since we have completed 25% of the project, it means the 25% overall gross profit over this project has been earned by the end of year 1. So if the total contract price is 2 million and total estimated cost as at the end of year 1 is 1.2 million, that means the overall gross profit over this project at the end of year 1 is $800,000, and out of which we have earned 25% at the end of year 1, and that exactly is $200,000. This is a shortcut of doing the same thing, is it, that we can find this number directly via gross profit. Let's move on to year 2. Alright, the cost incurred in year 2 alone is $600,000. The cost incurred in the previous period was $300,000. It means the total cost incurred so far is $900,000, and still at the end of year 2 we are expecting $600,000 additional cost. So $900,000 has been spent so far in year 1 and 2. Additional $600,000 is expected. That means the overall total estimated cost is $900,000 plus $600,000, that is $1.5 million. So $900,000 cost incurred so far divided by the total estimated cost, if converted in percentage, it would be 60%. It means the extent of the project that has been completed at the end of year 2 is 60%. Let us consider how much we can consider as revenue. 60% of this is the revenue recognized so far, that is 1.2 million. 60% of 2 million is 1.2 million. This is the revenue. And the cost incurred so far is 300 plus 600,000, that is $9,000. But we must not forget, in the previous period we had recognized $500,000 as our revenue in the previous period, and we had recognized $300,000 as our cost in the previous period. It means the revenue to be incurred, to be considered in this year, is $7,000. The cost to be considered for the current year is $600,000. So the difference between these two represents your gross profit for the year, $100,000. And that's what he has calculated right in front of you. This one, $100,000. We can find this number directly in a shortcut method. Like by the end of year 2, we have completed 60% of the project. That means overall gross profit at the end of year 2 is total project cost is the project revenue is 2 million, right? And total estimated cost at the end of year 2 is 900,000 that is already spent plus 600,000 to be spent, that's 1.5 million. So 2 million is the contract price, 1.5 million is the overall estimated cost. So the gross profit at the end of year 2 is $500,000, and we have earned 60% of this number so far, that is $300,000. So it means the gross profit earned till the end of year 2 is $300,000, but out of this we have already recognized $200,000 profit in the previous period, this one. So that means if the gross profit earned so far is $300,000, out of which $200,000 has been recognized in year 1, it means the profit that will be recognized in year 2 will be $100,000, and that is the short way of doing it, and you get the same answer as this using a shorter method. This is given here, right? Now the last year. Same data, we will do it for the last year. All right, in the last year, we have incurred the remaining cost. The project is now complete. So what is the total cost incurred so far? $300,000 plus $16,000 plus $550. That is a total of $1,450,000. And the contract price is $2 million. Comparing the overall cost versus the total revenue, we have earned an overall profit of $550,000, out of which $200,000 was recognized in year 1, $100,000 was recognized in year 2, and now the balance $250,000 would be recognized as the profit for year 3. And that is exactly what he has done. 250. Let us do from the cost side also. We have completed the overall project in year 3. So for year 3, this 550 represents the costs incurred in year 3. Out of the revenue, 2 million revenue, 500,000 revenue was considered in year 1, $700,000 revenue was considered in year 2. It means the revenue that is yet to be considered is 2 million less 1.2 million, that is $800,000. This is the revenue yet to be considered. So we will compare this $800,000 revenue to be recognized in year 3 versus the cost in year 3. You get the same amount of profit, $250,000, and that matches with the answer given in this example. So this is, guys, recognition of revenue over time for construction contracts. This was the input method. We considered the cost incurred versus the total expected cost, and that's how we determine the level of completion, the progress towards the completion of the contract. The next method, the output method, has different dynamics. In input method, the basis was cost. The cost incurred so far divided by the total estimated cost. But in output method, the dynamic to determine the revenue is based upon output delivered, milestones achieved, certain units produced compared to the total units expected to be delivered. Like for law firm, number of hours spent compared to the total number of hours estimated to be spent on a particular consulting engagement. So in output method, the focus is on the delivery, not the cost. The focus is on the delivery, the time spent, the milestones achieved, the appraisals of the results that have been achieved for a particular service. So the output method recognizes revenue based on the direct measurement of the value of the services transferred to the customer compared to the total remaining goods or services promised under the contract. Like there's an example for a law firm. A law firm enters into a contract to provide consulting services to a customer for 1 year period for a fixed amount per hour of service provided. Because the customer simultaneously receives and consumes the benefits. As soon as the services are provided, they are immediately consumed, provided by the law firm's performance as it performs. Revenue is recognized over time. Under the practical expedient, practically possible without considering the standards and the laws, the law firm may recognize revenue that it has a right to bill to the customer. For example, the law firm has spent 3 different types of staff hours. The senior consultants, they have spent, let's say 19 hours. The subordinates and junior managers, they have spent 50 hours and 90 hours respectively. We bill the customers for senior consultants at the rate of $90 per hour, for the subordinate let's say 80 per hour, and for the manager's level, maybe with the charge 50. So it means the total invoice would be based upon the hours spent, output, the performance, multiplied by these rates, and you'll get the amount that you will use to raise an invoice and bill to the customer. So we have a third situation also, where an entity cannot reasonably measure to what extent it has progressed towards complete satisfaction of the performance obligation. It is not practical for the business to determine to what extent have we completed the job. So in that case, revenue can be recognized only up to the extent of cost incurred. Like for example, I have incurred, let's say $100,000 cost on the project, and I cannot determine and I cannot measure my progress toward the completion of this job because there is no prior experience for this particular job. So this is the cost I have incurred. How much revenue can I recognize? I can only recognize revenue up to $100,000 only. Means there is zero margin, no profit. Only the cost incurred can be considered as a revenue. But this will be done only if the entity is unable to reasonably measure the outcome of the performance obligation and the entity is sure that it will be able to complete the job. First, the entity must be able to complete the job, but entity is unable to measure the progress towards the completion of the contract. In only that case, whatever the cost that has been incurred so far can be considered as a revenue, effectively giving zero profit. So let us take the example and do it directly from the example what has been explained here. It says on January 1st, year 1, Sadiq company agrees to build on the customer's land a bridge that is expected to be completed at the end of 3 years. The contract price $2 million. Okay, it's a construction contract. The promised bridge is a single performance obligation to be satisfied over the time. Because Sadiq has no experience with this type of contract, so he cannot measure the extent of completion. So it cannot reasonably determine the total expected cost of the project and the extent of completion. Hence, you can't use the input or output method. Accordingly, by the end of the year 1, progress towards completion of the bridge is not reasonably determinable. So in year 1, $300,000 of the costs were incurred and paid by Sadiq. However, the contract specifies that Sadiq has a forcible rights to payment of the cost incurred. There is a provision in the contract that whatever the cost has been incurred can be recovered by invoicing. So we can get this cost back that we have so far incurred. So Sadiq therefore expects to recover these costs. So year 1 revenue and cost of goods are recognized as per the following situation. There is no gross profit, of course. No gross profit is recognized. Whatever you have spent, $300,000 that you have spent will be considered as your revenue. So this is the original entry. You have spent this. This is the cost incurred out of your cash in bank, and same amount you can consider as a receivable and consider it as a revenue. So the cost incurred $300,000 and the revenue can simply be the recovery of the cost that has been incurred. The last very important point, if there is an expected loss in any contract, in any project, the complete amount of loss, whenever it is apparent that the project is going to incur a loss, the whole amount of loss will be considered in the period in which it is estimated that loss would be incurred. So as soon as an estimated loss on any projects become apparent, it must be recognized in full, regardless of which method you're using, input method, output method, or whichever method, or cost recovery method. You have to consider the loss in full in the period when it becomes apparent that the loss is expected in the future. This is prudence concept that says that every expected loss must be accounted for whenever it is probable. So that completes your unit 1.7, revenue recognition over time.